16 investments, 10 years of investing, one video. Let's get started. So a few things to help you understand how I came to this tier list. I considered inputs such as potential returns, effort, risk, the initial cost, and the stress of the investment. Okay, so the first investment that we're considering is real estate. I'm putting this straight at the top because this has proven time and time again that owning real estate and land has been a surefire way for generational wealth. That's what I mean by the wealthy category, investments that will set up you and your family. Not only can you get regular income from real estate, but the value of land always appreciates. And talking as a chartered accountant, the value of land will never depreciate. Even if we look at those people that didn't become rich by owning real estate, they might have started their own business or just had a good professional career, they end up owning land as they know it's historically one of the best long-term investments out there. It also has a possibility of being leveraged for other investments as well, using it as collateral. Now, there are pitfalls of owning land or real estate. If real estate is going to be your main source of income, then the costs might be significant for you, such as maintenance costs, costs of having empty houses, possible legal and accounting costs, as well as having the stress of having to be woken up at 2 a.m. by one of your tenants. And as a result, you do have to do your own research when it comes to location, house quality, the future potential of the area, as well as how to identify good tenants. But this all comes with experience. And once you've nailed it down, owning real estate and land is definitely wealth level tier. So the second investment that we're going to consider is owning your own business. I'm putting this as comfortable, and of course, there's a lot of work that has to happen for this even to be categorized here. Unlike land, it's not going to increase in value just sitting there. Owning a business is a very high risk investment, but a very favorable potential returns. And if you're going down this route, you will have to exert high mental effort to begin with. But unlike owning a property, the barriers to entry are much lower, especially with the rise of online capabilities. And again, just like investing in property, starting your own business does come with a lot of costs, especially if you decide to go all in. You're unlikely to be making any profit for the first couple of years, and you'll probably have to be working 7 days a week. But if you have the right self-starter attitude, understand your customers, and are a quick learner, then you can really drive this investment to success. Third investment that we're going to consider are owning commodities. And I'm going to put this as basic. And what I mean by this category is I don't see anything wrong with this investment. And in fact, I think it should form part of everyone's investment portfolio. But it's not something that's going to drive wealth or be used to solely live comfortably. So commodity covers not only gold and silver, but also other precious metals. And I'm going to put them here because there is good long-term potentials for investing in precious metals. Not only do you have the concept that gold can be used as a hedge against inflation, but other types of metals are going to have heavy future demand for a range of reasons, from being used in tech to renewable energy. There's also a fixed quantity of commodities, meaning you can't just create it from thin air. So owning commodities will always, by the very nature, be scarce and hence command a good value in the market. So owning commodities can be done via ETFs or in the physical form. And if we're talking about the latter, physical metals will always be universally accepted, but it's not straightforward. You'll probably be keeping it in a safe location, meaning annual storage and security costs. You'll have to visit the location to get it and then find a place to sell it. And when you do sell it, you pretty much have to sell all of it. It's not like you can cut a gold bar in half yourself. Like I said, it's always going to be accepted, but compared to being able to do things online, it's just another extra hassle. So whilst I am a strong believer in having commodities as part of your investment portfolio, with it being a scarce resource as well as being universally accepted, it shouldn't be seen as a big driver of investment growth, certainly when you compare it to the other investment vehicles, and really it's just something that complements your other investments. So the fourth investment that we're going to cover are dividend stocks, and so far it's been pretty straightforward, but this one required a little bit of thinking. Now, the world of dividend investing definitely requires its own video, but what I refer to is investing in companies specifically for the dividends that they pay you, and I'm going to put it as basic. Now, I started to get involved in dividend investing because I watched way too many YouTube videos on the topic, but unless you have over 100,000 invested in dividend stocks, you're unlikely to see any life-changing gains. The only time I'd personally get involved in dividend investing will be as I get closer to retirement, and there's two reasons for that. At that age, I don't want volatility, and companies you invest in for the dividends, such as Coca-Cola, are mature companies and have a predictable year-on-year revenue. The second reason is for the dividends. See, at that age, my main source of income, which will probably be my salary, will disappear. And in retirement, the dividends will give me some kind of salary which I can predict year on year. Now, these companies generally pay around 3 to 7%, and you'll use your pension to specifically buy dividend paying company stocks. But if you did the maths, 3 to 7% returns isn't a lot. If that's what you're relying on to get any decent income, you'd need to have way more than 100,000, what I just said, probably around the 250k mark. And as a result, the only time I'd really get involved in dividend investing is as I get closer to retirement. For the majority of people under the age of 40 and definitely under the age of 30, dividend investing isn't a great option, especially if you consider the alternatives out there. You'll be missing out on a lot of growth companies such as Amazon, Apple, Google. So right now, I'm going to put it as basic. Now, don't get me wrong, dividend investing is an easy form of passive income. They're considered safe, low volatile stocks with all great credit ratings. Now, dividends aren't of course guaranteed, but there's a list out there called Dividend Kings and Dividend Aristocrats that show you the most consecutive dividend paying companies, which is what people go for when it comes to pursuing dividend investing, and I'll paste a link to them in the description box below. If you're liking this video, then make sure you hit a like and hit that subscribe button if you're interested in learning more about financial decisions as well as top career advice. So back to the list, and next we have index funds. This is going in the wealthy category and there's absolutely no doubt about it. So an index fund is a basket of companies depending on what the index is tracking, the most famous one being the S&P 500, which tracks the average returns of the top 500 US-based companies. Doing this not only diversifies your risk, but you don't need to be emotionally invested when it comes to index funds, as it's the most boring form of investing. And that's really what good investing should consist of, being detached from any emotions. Now, you might be thinking any investment that makes it on this wealth level tier should have a lot to talk about. It should be exciting and there should be high learning curve, but there's none of that with the index fund. You rarely hear about index funds on the news or YouTubers talking about them because there's not really much to say about them. It's difficult to make money off them for YouTubers because it's so easy to get involved, and once you're involved in them, there's nothing really to do. Just keep making regular investments, and historically, it's shown that your wealth will just keep growing. This is by far the most comfortable wealth level investment out there. The sixth investment that we're going to be looking at is stock picking, and here I'm referring to picking individual stocks such as Google or Tesla as part of your investments, and I'm putting this as basic. You have to understand that if you choose to do this as part of your investment portfolio strategy, then you're really pursuing a strategy which is frankly out of date. There's quite a lot of tales out there which you'll probably read of people that have held onto individual stocks for over 50 years and it's made them significantly rich. But this was because there was very little alternative for a very long time. See, back in the 1950s, there were less than 100 funds available, but now there are tens of thousands, and the stats prove how much you're missing out by sticking with individual stocks. The average investor who picks stocks earned just 2.9% per year on average. Investors who simply stuck their money in an index such as the S&P 500 earned 7.5%. Now, I'm not saying don't pick individual stocks. My own portfolio consists of this category of around 10 to 15%. But if you're relying on picking individual stocks to build wealth as an investment strategy, then you're not only wasting your time, but you're missing out on returns. And to be blunt, you're not going to beat the market returns of what the index fund will give you. Stocks, in my opinion, should definitely be part of everyone's investment portfolios, but compared to the alternatives, the research required and the diversification risk, it's going to get ranked just as basic. Okay, so next we've got NFTs. So the eighth investment that we're looking at is pensions, and this is in the comfortable category. If I could give one piece of advice to every 21-year-old that's about to start their first job out of university, it's to start a pension. And apart from pensions having tax benefits in many places such as American Roth accounts or SIPs in the UK, you not only develop the habit of saving, but since you also can't access the amount till a certain age, you'll benefit from the effects of compound interest. However, that last point is also a drawback, and that's why I've put it here in the comfortable category rather than higher. You're restricted at what age you can withdraw the money, and so whilst I'm a big believer in pensions, I know that I have to have other investments as well to live off if I want to retire early. Okay, so next we have crypto, and this is going in the basic category. Some people might put this in a wealthy, whilst others might put this last, and here's my opinion on cryptocurrencies. And what I'm specifically talking about here are Bitcoin and Ethereum. So the reason why there's a lot of skepticism of these cryptocurrencies is primarily because it poses a big risk to the ways things have always been done. I'm personally a strong believer in these two cryptocurrencies being big in the future. Now, governments and regulators are becoming more and more accepting of Bitcoin, with the first Bitcoin ETF recently approved, paving the way for loads of others as well as Ethereum ETFs. And with banks and hedge funds creating their own cryptocurrency trading desk, as well as having investments themselves into Bitcoin and Ethereum, it's way past it being some form of gamble. And their value is only going to increase over the coming decade because a key component of its existence is, unlike cash, there's only ever going to be a fixed quantity of each of those cryptocurrencies. Now, would I say make it a large part of your investment portfolio? Probably not, I wouldn't. And if you're relying on Bitcoin and Ethereum to make you comfortable in life, then it's still a long way off from that. The volatility of them is too high for it to be considered in those categories. But I put it as basic as I feel comfortable having a small percentage of my investment portfolio in cryptocurrencies. And talking about cryptocurrencies, we do also have to consider everything else in that arena, specifically those meme coins. Just know, I ain't going to lie though, I do have some, and this can't be called an investment though. Everyone knows these meme coins are created on trends and fads, and really, you're just gambling to hope it's popular enough for the price to rise. And we end up reading articles of someone who invested in them and got rich, and then we go down the slippery slope of trying to invest in the next meme coin to make us rich. You just end up losing your money, and you really should not make it part of your investment portfolio. Day trading, and this is again, just know, is massively popular on YouTube, but I know for the fact that a majority of YouTubers aren't making money from day trading, but selling courses and software to people. There's one guy who pops up all the time on my YouTube adverts showing his houses, his cars, where he is in the world. I'm not going to name him, but it just annoys me because he looks legit, he sounds legit, but it's his courses that make him money, not the trading. And browsing on Reddit, day trading is all over Wall Street bets. You can see the losses people make from trading are just mental. I don't know how they're affording those trades. And I know that's just a specific group of people, but it shows you how things can go very wrong very quickly when it comes to day trading. So reviewing the inputs of this ranking, whilst initial investments might not necessarily be large depending on the type of contract you go for, the stress levels will outweigh any of the positives of this investment. Day trading is legit, but ridiculously hard to be good at. So the next investment we're looking at is yourself. This is the easiest to classify, and that's wealthy. If you don't invest in yourself financially, physically, mentally, spiritually, nothing else will matter in terms of investments. You won't have the knowledge or ability to understand good opportunities, learn how to spot risks, or how to develop self-reflection to grow from your mistakes. But if you can invest in yourself, whether that's reading, traveling, building relationships, everything has a potential to be classified in the wealthy category for you. There's nothing else to say about this. Never give up on chances to grow, and don't miss out on new opportunities just because you're scared of failure. All right, so the 13th investment we're looking at is a university. And this is basic. So I'm not against university. I've been to 3, and getting a degree can take people out of poverty. And for some jobs, you do actually need a degree. So I know it's important for certain people. And if you do want help on how to select the best universities, I've written an ebook where I've interviewed over 50 graduates, as well as incorporated my own experiences to come up with 13 questions that you need to answer to make the right decisions. I'll leave the link to that down below. But these days, there's an issue with universities. If you're going for the sake of learning, then it's not like before where tuition fees were manageable, but rather you'll come up with thousands in debt with knowledge that nobody really cares about, which means you'll end up on a very low paying job. Hence the need to select the correct university if this is something that interests you. But secondly, with so many online opportunities, the need to go to universities to get a well-paying job has gone down. In fact, many traditional jobs which always required a university degree now offer other routes such as apprenticeships, where you can work straight away or work alongside your university, earning a wage and a free degree. So I'm not going to put it as new, but probably basic, as I know it will offer opportunities for a lot of people, but don't think this is a guaranteed way of making wealth. So that's why I'm not going to put it higher, as I know there are increasingly other ways to do what previously only a university education got you. So we got Forex, and this is similar to day trading. I don't care what YouTubers are showing you, you're not going to somehow be that 1% of people in the world who can make this into a decent investment. The amount of leverage you'll have to take to even get started is going to put you in a big financial hole, and the stress is super high. It's a legit form of trading, there is money to be made, but seeing this as investments or something you should try and focus on, it's way down the list. Savings account, so this is noob. A savings account won't do you any good when it comes to investments. the rate offered will usually mean inflation will eat away at the cash sitting there. And so the only real need for a savings account is where you need to access to the cash for the next roughly 2 years. So this could be for your emergency fund, or where you need your cash to have very low volatility for something that you're going to utilize it for, such as a house deposit. Outside of that, don't waste your time on trying to find out what the best savings account is, or waste building investments in this manner. And the last investment that we're going to look at is art, and this is a perfect example of how the investment world can change. Previously, only the rich could afford art, and you had to buy the whole painting, meaning it'll generally cost you millions to even get involved. But these days, you can own part of a painting, and so owning art has become a lot more accessible. More importantly, art as an asset class has actually outperformed stocks and even wealth level investments such as index funds. But if that's the case, then why is it so low? Well, realistically, how much are you actually going to go and learn about art and what makes a good investment? Accessible art investments are still in their infancy, and so there's a lot of scammers out there trying to take your money. And one important to take note of is the secondary market. Once you part own the painting, it's not like you can then sell it on the stock market. In fact, it'll actually be a lot easier to sell property than your share of the art. So that's why I'm not going to really push this, and it's certainly not part of my investment portfolio for now. I don't know enough about art. I'm not going to spend time learning about it, and apart from being difficult to sell, it's difficult to tell when prices will rise, if they ever will. If you're someone interested in finance or are currently studying finance and you want to use your skills and knowledge to earn some additional income, I've already made a video which is catered exactly for that skill set. I'll leave that next to me. Go check that out, and I'll see you all in the next video.